and welcome to the first edition of Indianomics in the new year. We do hope this year sees high growth, low inflation, low deficits, big FII flows, big Sensex gains, low bad loans for banks. But we can't be sure of any of these. One thing we can be sure is Indians will bank differently by the time 2016 ends. In a bit, I will be speaking to Ajay Srinivasan, the CEO of Aditya Birla Financial Services, a winner of the payment banker license, on how he sees the banking and payment scene. I will also speak with KK Jain, a maverick entrepreneur whose voteforcash.in sanctions personal loans just by running an algorithm on your phone bill, on your social media presence. But before we meet all these gentlemen, here's a word on what's new in Indian banking in 2016. 11 payment banks will come into being in 2016, many of whom have an evolved mobile telephone network. If each of their telephone account becomes a bank account, then Airtel will have 250 million bank accounts. Idea will have 170 million bank accounts. In comparison, State Bank today has only 55 million bank accounts. Before the year ends, plastic may be passé. We could be paying for our meals like we pay today for our Ola cabs through the mobile wallet. Migrant labor will be remitting money through mobiles. Governments may give scholarships and subsidies through mobiles. The National Payment Corporation's unified payment system will enable us to pay all utility bills through the payment gateway without even quoting our bank account number. Flipkart and Snapdeal may give loans and EMIs to their customers and loans to their SMEs from whom they source products. Several questions rise. What will banks do? Their current and savings account float may fall. They may have to pay more interest for this cheap deposits. So, they may be handicapped in facing up to the new boys. Will retail deposits and loans flee the legacy banks? Will some banks die away, as Gen Next prefers operating with mobile banks rather than with their neighborhood banks? Truly, there's revolution in the air. Well, those are some questions. And to answer them, I met Ajay Srinivasan, CEO of Aditya Birla Financial Services. The AB Birla Group is a leading mobile phone service provider through Idea. It also lends in financial services with an NBFC, mutual funds and insurance products. And it has won a payment bank license. So if anyone should know how the banking scene will change, Ajay should be one. Here's a slice of my chat with Ajay Srinivasan. The first question really is, when is your payment bank getting launched?
I think we are working to get it done in 2016. I don't think it'll be early in 2016, but clearly a lot of work going on at the moment to make sure that we can launch it in 2016.
When the day you launch or the day any of the other payment banks launch, you will already be offering a bunch of financial services through NBFCs whom you will tie up with?
Yeah, I think the way we look at the business model is the payment bank, especially when you're working through a telco like we will be doing, gives you a phenomenal highway or a piping system, if you like, to a large customer base. And then it's a question of what products and services you're able to push through that pipe. And definitely a lending product will be a key product to put into that. Maybe a small ticket savings product could be an interesting product, and maybe even a small ticket insurance product could be interesting to put through that pipe.
The NPCI's payment wing, unified payment system, already comes into play. What are you hearing? Will that be up and running before the payment systems?
So we're hearing that that's also moving pretty quickly, so that could come at the same time, could be slightly earlier, so could be slightly later. But that is purely payments, and I think the payment bank proposition, I think, is slightly broader than simply payments. I mean, obviously we're looking at it as a complete proposition from a customer viewpoint. So I don't think directly there's going to be a direct clash.
Okay. So what will be the model of the payment bank? You all expect to make money by getting a commission on every loan you sell?
Yes, because the payment bank itself can't make loans according to the regulation. So obviously there'll be some fee that it'll get, a referral fee equivalent on other products it sells. And obviously the transaction revenue is obviously the key source of revenue that the payment bank will look at. And we're hoping that the volumes will be significant enough to make that a reasonable revenue line.
Remittances will also fetch you fees?
Yes, I think remittances are big and clearly growing area in India. So remittances, payments, I think both of those should be areas that we should look at as revenue sources.
What is the sense you are getting from the regulators? Is it very clear now that all you have to do is to send a call to your Idea phone users and ask them, can I open an account, and it's a yes, or will it be a little more tedious in terms of KYC?
So other than the KYC, I think the big discussion really is around the use of infrastructure, because the telecom company has large infrastructure, and which bit of that infrastructure is possible to use in what form, whether it's a branch equivalent or whether it's a BC equivalent. I think those are some of the discussions that are going on. I think on KYC already there are lots of things happening. There's eKYC happening. There's lots of discussions on how Aadhaar can be used with or without biometrics as a KYC measure. So I think those are moving at reasonable pace. I think the bigger discussion is, we have this massive network the telecom companies have. How can you best leverage that network without having to replicate it?
The RBI's KYC would be most important, isn't it? If you want to make people open a payment bank account.
Yes.
So over there, what are you expecting? You will be able to match up to the KYC required for a bank?
I mean, clearly we have to. If that's what the regulation is, we'll have to match up to that. We're hoping that we'll make progress with different methods that will allow an easier use of KYC. The telecom companies do a whole lot of KYC. The question is, can we leverage some of that? I think we'll need to do our own KYC. How much of that KYC can be simplified and made more efficient? I think that will be a very key factor in growing these accounts.
Okay, let me now look at the competition. Like you said, probably the unified payment of NPCI is not very big competition. What about competition from these peer-to-peer lending guys? Now Reserve Bank says that they're also going to make rules for peer-to-peer lending. SEBI already is contemplating. Won't that be big competition?
Well, I mean, even if you look at the US, Lata, I think peer-to-peer lending really hasn't taken off and become that big yet. I mean, clearly it's happening and it's growing. It's not that it's not growing, but as a percentage of the total system, it's still small. So I think these are things that will kind of evolve over a period of time, and we'll wait and watch to see how big they are. I think they'll continue to remain reasonably small in the overall context of the Indian financial services system.
You mean even the loan amounts, the ticket sizes will be too small to be a challenge for you?
No, I think the ticket sizes may be comparable with some things that we do through an equivalent of a payment bank. But I just think the markets are going to be very different, and the delivery systems, the service experience is going to be very different. So if you want everything on a single device, and you want to be able to complete transactions on a single device, then the payment bank might offer you a more complete and holistic service proposition than a peer-to-peer lending mechanism. So I think it's a while before the peer-to-peer lending will become significant.
The Reserve Bank governor has been consistently speaking about looking at allowing the retail digital markets